Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 23rd of September, 2015. Here we are again, another Trader Bite. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight, lots of news. Some of you probably were present when this happened. The Chinese PMI came in the lowest in 78 months, causing a 19-point drop in the ES overnight. Soon after the European markets opened, and we'll look at this. The European markets opened to regain lost value, with French PMI showing expansion for the first time in a while. VW shares dropped 7% overnight and recovered with this risk-on trade that we've seen. The Japanese markets are closed again. Several comments and releases from ECB's Prate about the duration and size of the QE. Remember, the ECB is under pressure now with the FOMC holding on the interest rate raises. As mentioned before, there is a currency war going on, and these central bankers are forced to devalue their currency to support their economy, and it is a race. And then finally, the S&P fair value is at negative 10.7. Negative 10.7. Somebody asked me on Twitter yesterday, I forgot who it was, why it is at negative 12 or greater. Sell programs technically kick in at negative 12.2, and buy programs kick in at negative 9.0 of premium. But the fair value, again, is negative 10.7. That's a computed value based on where the equities are trading versus where the futures are. And looking ahead at today, we're looking for U.S. manufacturing PMI preliminary 52.8 is expected at 8:45. That's 15 minutes after the open, 9:45 Eastern. And then we're looking for crude oil inventories at 10:30 today. 9:30 today Central, 10:30 Eastern. The consensus for oil inventories is negative 1.65 million barrels, distillates plus 1 million, and gasoline plus 350. As far as speakers, we have several on deck. At 8 o'clock right now, we have ECB's Draghi holding his quarterly hearing in Brussels, looking for comments there. Draghi's forecasts are showing a slower increase in inflation. Oil prices are inflation risks. Reiterate, inflation could remain flat in the near term. Too early to judge whether the factors that emerge this summer will cause a more lasting slippage in inflation. So keep an ear out if you're trading the currency pairs for what he's saying. We're getting ECB Speaker Weideman at 11 Central, 12 Eastern, a known hawk, and then we're getting Fed's Lockhart at 11:30 Central, 12:30 Eastern. Let's move on to our technical picture here. So yesterday we opened in a gap as expected. We're looking for the primary hypothesis yesterday is wide swings on the open again. We got, it's not a good color, is it? Let's go to yellow. Wide swings on the open and a responsive buying expected again. And what was our target yesterday? That's right, 12 quarter 1350 was our target, and we did get responsive right here, and the market makes a lower high, and then finally we get a good rotation down. This looks like Monday's trade basically. We got a wide rotation down, we got some flagging back to the mid. Beautiful trading there, back to the mid, and then we finally get our lower low, 2050 first time, and 19 even on this lower low. This is our continuation push. It had one more in it down to 1775. You could see that it's tapering, but it's tapering very rapidly. This looked to me like it had some more in it, but once we got this rotation here, a 10.5 point rotation up, that was game off for our target of 12.25. Again, Hypo 1 is working here again. It did what it's supposed to do. However, we did miss our target by a wide margin of 5 points, 5.5 points. Just could not muster the selling power to continue lower. And we ended up with a normal variation day. You can see we broke the IB low here, and then just held sideways for most of the session. There was plenty of energy, plenty of volume and energy on the lower end of the profile to really give us a nice spin down. It just never happened. The market ended up resolving this consolidation to the upside. So overall, Hypo 1 worked out there. However, it did not hit its target. Then, if you recall, the area of resistance that we were expecting if the market was to get really responsive was right here, 39.50, 40.50. Those are the primary area of defense for the sellers. And the expectation was if it was to push, it would push up to those areas before it becomes initiative again and starts selling off. It didn't get there. It got to 36.75 and then before the rotation. So now, with the way it closed, double distribution. You could see here a small distribution and a large distribution with a clear neckline. This LVN right at the opening swing low at 28. If you recall, on the composite, on the micro composite, what was the area we needed to defend yesterday to keep pushing down? That area was 28, 29, 29 even at the moment at that time. Now it has shifted down to 28 because of yesterday's trading. So we put in a neckline yesterday right where the microcomposite neckline was. If you don't understand any of this stuff, it's just hang in there. It'll start to make sense after a while. If you want, just go to the video archive on futurestrader71.com and catch some of the earlier videos. You don't need to pay anything. Just look at the earlier free videos and it'll go over what the auction process looks like. So we ended up closing above the cutoff line. We ended up closing right here, right on this CHVN, and it looked great until the Chinese came along. When China announced its PMI, essentially what the market did is it rotated through and is balancing where it was, and then there's the PMI release right there. It moved from 1929.75, basically 1930, which is where it reopened, all the way down to 1910.50, which is the overnight low. Pretty decent range there, 19 points, 19.25 points. And then it had a small pullback. The expectation is that it would continue lower. It did hit that 13. Remember the 13.1250 right here. It did hit that on the overnight session, but that doesn't count. We need to hit it with the equities open for it to be considered tested. Remember, we look at the Globex session because it is part of trading to get clues on what'll likely happen on the open, but it does not drive the overall auction because the S&P without its 500 stocks is just trading in sympathy with the Asian or European markets. So any real tests, we would want to see those with the stocks taking participation. And then the European Open occurred right here. And you could see it's just been a strong uptrend. The French results were strong. We ultimately ended up taking out yesterday's high and pushing to 41.75. Remember, 1940 was that resistance line. Before we had an 11-point rotation down, we attempted the 38 again, and we've got a lower low. This looks like a corrective move. So here's your impulsive, here's your flagging move, here's your continuation, and here's your corrective move, and it's likely to keep pushing lower now. The target for this is around 1920 before the open. So this leaves us with a very odd situation here. The overnight high is pretty weak. The point of control on the overnight session is near the overnight high, so there's plenty of energy up here. Looks like it's dissipating on the downside now, and so it puts us in a situation where we have a lot of conflicting information. Overall, what we have is an overnight low that's way down here, and we have a market that's trading up here, and then we have an overnight high that got up here, and then an overnight point of control that's up here. That's very contradictory. Essentially, what the market has done is it's canceled the auction that occurred overnight and is starting over, and it looks like it's likely to open in value, in range, and right up against that 1928 area, the key area. So what does that mean? It means we're likely to get turbulence on the open. We're likely to see an open that has two-way interest. That's what would cause chop. Chop is caused either two ways to have chop, right? This interest mainly from the OTF or the higher time frame, the controlling force in the market, the bigger players that generate the trends. This interest on their part leaves us with short-term traders, you and me, locals, day traders, short-term swing traders, and so on. And generally what happens then is you have a trade that just goes back and forth and is imbalanced. Generally you do not see a trend that is driven by short-term inventory. That does not likely happen. So with that being known, the second factor in having chop in the morning is OTF is present, and OTF is just beating the heck out of each other. They're just duking it out, and what you end up with is what we had yesterday, what was expected yesterday and the day before, which is chop with wide swings, because there is a key imbalance against a key long-term area. We see that on a micro composite, and so we see interest. If we see a reason for, say, a hedge fund or a larger player who's been waiting to buy, we see a reason for them to get in, and then we see a reason for longer term players also to see that there's a gap lower, and so it's in their interest to sell and push, and therefore push prices lower. Today, we're likely to have short-term interest in play. We're likely to have chop on the open. We're likely to test this 23. We're opening in range in value, high probability of a test of the point of control, and then we're likely to just chop around. I don't have a clear hypothesis or a clear probability. And again, as a trader, we don't trade how we feel about the market, which I know a lot of traders do. We see that through the folks who just start at stage 5 and so on. But there's a lot of emotional trading. The goal is to avoid emotional trading and to trade based on what you perceive to be a higher edge or a higher probability of one thing happening over another, and that's the definition of an edge. That's as good a definition as any. And so we don't want to get emotional here on the open and make a decision just because we took a short and it paid us yesterday, or we took a long and we lost on it, and therefore we're just going to fight the market and get long all day. We want to look at what it does, and given the circumstances, the fact that it's in between these two high volume nodes, these two distributions opening in range, in value, if it remains in here, my hands are off until the PMI, until the release this morning, until the early manufacturing PMI release this morning, and then I'll see if it breaks through the 28 and I see a nice drive to 23 and poor rotations up, then I'll look for the short down to 1250. We still have not tested this area yet. I would look for that to be tested. That brings us down to the overnight low. If not, and it chops around and it touches or takes out the yesterday's point of control, the most valuable price of the day, most traded price of the day, and then starts to get small rotations down, good rotations up, then I'm going to look for it to reach back into the high volume node, and then at that point 4050 becomes the target. So whether hypo 1 or hypo 2 will work, it's really a toss up given where we are. We still have a gap above. We still have a gap zone above us here, and there's a lot to do up there. Extended target's going to be 48.75 back into that range from Monday. That's all I have for you for today. I know it's a lot to take in first thing in the morning, but that's how the market's shaping up, and hopefully you'll benefit from this. Good luck to you, and I'll catch you tomorrow. Take care.